And I want to explain why we're also at an inflection point, a very, very dangerous inflection point. That's why in the book I explain it, but I just want to explain it in a nutshell. The credit system is like the circulatory system, and it brings buying power to the whole economy. And that is great. It produces debt, but if the debt is invested, that produces income, that it services the debt, it's a very healthy environment.
Right.
But what happens is that there's this accumulation of debt and debt service payments. Right now, for example, for the government, we are operating with a $7 trillion spending and a $5 trillion intake. We're spending 40% more than we're taking in, and this is a chronic problem. So what you're seeing is the debt service payments beginning to squeeze away, not beginning, well into squeezing away. So it's like plaque in the arteries, squeezing away buying power. You can do the numbers. You will see that you can have an economic heart attack as a result of that, that we're going to very soon get to the position that you need debt to pay the debt. Think about it this way.
That's crazy,
okay,
Ray.
$1 trillion in interest, $9 trillion of debt that's coming due. So you have to sell that again. That's $10 trillion. Plus $2 trillion of new borrowing. That's $12 trillion that you have to sell in terms of the markets. So the second big influence is the supply-demand influence. By knowing really how much has to be sold and who the buyers are and the likelihood of that amount being bought, one can calculate the imbalance. That's a problem.
Yeah, the word broke is certainly scary.
Trust in our federal institutions has been crumbling to all-time lows and now lays in ashes on life support. And it's all because of what Ray Dalio stated right here. We are dealing with a lot of problems surrounding the US dollar and reckless spending by those in charge of printing it and spending it. This is essentially what the almighty US dollar is backed by, the full faith of the US government. Some of you watching this video remember a time when fiat used to be directly convertible for gold, a true store of value that you could use anywhere in the world. But then under Nixon in 1971, that ended alongside the Bretton Woods Agreement. The gold standard was gone forever, and in came inflationary monetary policy. And what we are seeing is what happens when trust in that backing is no longer present. The dollar continues to decline against the stock market, crypto, and gold all at the same time. The dollar is collapsing because a group of central bankers and politicians who eat off the fat of their extremely wasteful spending bills consistently inflate the supply, add to our debt, and ultimately rob average Americans of their future and their buying power. Now, as a viewer of this channel, you probably already know this, but crypto is here to stay. And now the largest players in markets can't not only ignore it, but they have to be forced to join it, because if they do not, they will be left behind. They now realize this. Case in point, one of the largest major global remittance companies like Swift are late to the party and introduced on September 29th their latest announcement surrounding the fact that they are building a blockchain-based ledger. And now they're trying to roll this out to 30 of their partner banks and hopefully to more in the future. But already they've done too little and too late on what many crypto companies and Ripple have been working for years. So we'll cover what this means for XRP moving forward, and even how the largest US bank, one that is systemically important and plays a major role in global markets, is now taking the trade. This is what JP Morgan Chase is calling the great debasement trade. This is the very same bank, which is quite interesting, that was run by Jamie Dimon, still is, who literally called Bitcoin a fraud and a Ponzi scheme and says that crypto is hopeless as a currency. Now, these statements were made back in 2024, and around that same period of time, he said he would be firing anyone on their trading desk that was caught trading crypto and Bitcoin. Yet now JP Morgan is on the side of crypto because, again, they cannot ignore it. Not even the largest bank in the world can ignore crypto. So in this video, I'll be covering their latest statements and how it's going to affect the crypto markets, and more importantly, your XRP bag moving into one of the most bullish calendar months on record. October. And also, if you're wanting to make the most out of your crypto gains this year before the tax man comes knocking, and plan into your retirement through a tax advantage IRA or Roth IRA account, then check this out, because for a limited time, we're offering a free $100 bonus that you can get by rolling your account over or starting an IRA account through iTrust Capital directly on our link you'll find in the description below. And what's so unique and cool about iTrust Capital is that they offer access to cryptos you won't find anywhere else through your IRA. Cryptos not only like the majors Bitcoin, Ethereum, XRP, and Solana, but even XLM, SUI, HBAR, World Liberty Financial, major AI tokens like BitTensor, some of the largest meme coins like Pudgy Penguin's Pengu, which has been crushing it this year, infrastructure tokens, or even like Ondo, real world asset tokens. The list goes on, and they're always adding to their suite of products. So check this out.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
So head on down to the link in the description below for iTrust Capital. You'll see a page that looks exactly like this, and when you use our code BULLRUN9, you'll be eligible to get your $100 bonus by rolling over or starting your IRA account today. And as always, my friend, if you're feeling blessed and bullish, comment 777, and if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PAULIEDEFI. Want to talk about the government shutdown. We're currently hitting all-time highs in markets, whether it's crypto or the stock market, into a consistent government shutdown. The average government shutdown lasts about 8 days. This one is likely to last longer. Now, between 2013 and 2019, 3 government shutdowns were caused by Ted Cruz's stand against the Affordable Care Act, Senator Chuck Schumer push on children of immigrants, and President Trump's demand for border wall money. Then the last shutdown occurred during the Trump administration and is now occurring again in the second Trump administration, with the Wall Street Journal stating that in 2025 the shutdown is about something deeper, a complete breakdown in trust. Now, I don't always agree with the Wall Street Journal and how they might word things because it seems a bit biased. We get it, right? Nobody really trusts media, so much so that they even state it inside of this article. It's gotten so bad for the average person that the crisis of faith in democracy isn't limited to Congress and the president. Only 27% of Americans this year said they had a great deal or quite a lot of confidence in just the Supreme Court, compared with 40% in 2020. So trust is deteriorating in the Supreme Court, and it's probably across the board with both Republicans and Democrats and even independents and moderates. The Gallup poll found only 17% said they had high levels of confidence in the criminal justice system, about 10 points lower than 2012 to 2013. What's even funnier is that it's from the Gallup poll, which in my opinion, I don't fully trust. But at the end of the day, there's one thing I'm consistently seeing. It's a breakdown in trust. Faith has collapsed in other mechanisms of democracy. Only 11% said they had high confidence in television shows. Gallup found this year tying a record low in surveys that date back more than 2 decades. Only 17% had high confidence in newspapers, close to a record low. And across the board, we're seeing record lows in virtually everything, as we have a US government $7 trillion colossus tucked inside of a $30 trillion economy, where we're creating more and more debt, and the average person is getting suffocated out of a moderately decent living situation because their dollars are worth less and less. And so as our government continues to print more dollars, stating that they're always doing it to help us, that they're trying to create more affordable ways to help lower income individuals, anyone who doesn't make six figures, whatever the case may be, it always seems that prices stay high, both in oil and gas this time around, in groceries, in housing, and in virtually anything that your average person or family would need to live. And this is all because we are officially in the new global world order of fiat currency. Before 1971, essentially after World War II, we had the Bretton Woods Agreement. Basically, we were on the gold standard, a situation when foreign governments, or anyone for that matter, could exchange their dollars for gold. However, in 1971, that summer, Nixon addressed the nation on a new economic policy that was not only intended to correct the balance of payments, but also stave off inflation, and these are always their excuses, and lower the unemployment rate. What's super interesting is, yes, this situation was very dynamic. There are no easy problems at this level when it comes to currency and trade, but at the end of the day, there's one thing we can all agree upon. It's the fact that getting off the gold standard has actually created far more inflation, and the value of dollars have only consistently declined since 1971. History has always proven that to be the truth, and virtually all fiat currencies go to zero because human beings are the ones in charge in managing the whole system instead of cold, hard code. The first order was for the gold window to be closed. Foreign governments could no longer exchange dollars for gold. In effect, the international monetary system turned into a fiat one. And so over time, not only has trust eroded in our federal agencies and those who run it, but it's actually eroded in the US dollar because there is less and less demand to actually buy US debt or treasuries. And that is also denoted by the fact that the US government bond, the 10-year yield, has remained over 4% for essentially 3 years straight. Those who are lending capital to the United States are asking for more interest in order to hold debt. And in layman's terms, what they're really saying is it's riskier to buy US treasuries and debt from the government because they're being reckless with their currency and inflating the crap out of it. So as there is higher rates of inflation, I'm going to ask for more interest in order to not only keep up with the inflation, but to actually make it make sense for me to lend to the government to begin with. And so in effect, what Ray Dalio is saying is 100% true, that we need more debt in order to pay off prior debts. The debt just continues to grow. We have a larger debt burden. It's going to harm our fiat currency. That said, there's going to be a time and a place where there are no more buyers of the debt as it continues to expand and grow. Listen to what he stated again.
$1 trillion in interest, $9 trillion of debt that's coming due. So you have to sell that again. That's $10 trillion. Plus $2 trillion of new borrowing. That's $12 trillion that you have to sell in terms of the markets. So the second big influence is the supply-demand influence. By knowing really how much has to be sold and who the buyers are and the likelihood of that amount being bought, one can calculate the imbalance. That's a problem.
And this is why the largest banks in the world can no longer ignore the issue of fiat currency and what JP Morgan Chase is now calling the great debasement trade. Now, one could argue they were misleading people. They've been consistently positioning themselves. My personal opinion is that the majority of major banks and the biggest institutions actually treated crypto like a joke and tried to fight it through our regulators so it actually would never take off. But now that they can't beat it, they have to join it. They wish they had a bigger position, but instead what they're going to do is double down right now, similar to a Swift, and start promoting some really big headlines in order to get the majority majority of retail in after the fact. That said, let's have a listen to what Yahoo Finance talks about and what they are calling the debasement trade.
All right, JP Morgan has predicted that Bitcoin could hit $165,000 by the end of the year. That's around 40% higher than where it currently trades. Why? Well, they've coined the term the debasement trade. This is when investors, and in particular retail ones, flock to Bitcoin and gold as hedges against deficits, inflation, and weakening traditional currencies. The dollar certainly has been. Now, basically, the rising popularity of Bitcoin and gold reflects deeper economic anxieties. Well, since late 2024, retail investors have been pouring into both Bitcoin and gold ETFs. As you can see, Bitcoin trades just at around $120,000 right now, up over 1% today. But over the course of the year, it's still lagging behind gold's performance, as you can see here. Now, JP Morgan's prediction is based on a calculation that reflects the amount of capital needed to hold Bitcoin versus gold and comes at a time when demand for both assets is surging. In the bank's report, it highlights how this valuation gap has shifted. At the end of 2024, Bitcoin, it says, was considered $36,000 overvalued compared to gold. Today, it's roughly $46,000 undervalued, creating a strong case for upside. Now, gold prices today are fairly steady, but they're heading for their 7th consecutive weekly rise. JP Morgan says that this stronger demand for safe haven assets like gold and the fact more retail investors are getting involved has pushed them to revise their call on Bitcoin higher. And they're not the only ones. Some have even projected $200,000 by year end.
And so I know we're talking about Bitcoin, but again, if Bitcoin is doing really well, it's going to provide room for the entire crypto market to do well. And virtually all altcoins usually pump within a week to sometimes a month after Bitcoin. In other words, money rotates out of Bitcoin. We're talking big key institutional players will dump money into Bitcoin. Whenever profits are made there, a lot of that will rotate from even major investors with millions of dollars into altcoins, and some of the strongest ones being your majors like Ethereum and XRP. So yes, XRP is going to have a major windfall when Bitcoin does well. Now, by framing this as the debasement trade, they're explicitly telling clients in a world where stimulus checks, trillion-dollar deficits, and rate cuts into persistent inflations are the norm, holding cash or bonds is a fool's game. And now JP Morgan, for one of the first times, is telling their institutional clients to pile into things like gold and Bitcoin and away from the almighty dollar. It's because they see what's coming, a tide of debasement that no rate hike or fiscal promise will reverse. Now imagine this, Bitcoin continues to climb. The entire crypto market continues to climb. Q4 of virtually every single year into the 4th year of a cycle is extremely strong for crypto. We're seeing an earlier start to the October pump than we have in past bull market cycles. We saw a stronger summer than we have in past bull market cycles. For the first time ever, gold and Bitcoin are highly correlated. They're still both trading up in the same direction. When in the past, sometimes gold would rise and Bitcoin would fall because Bitcoin was treated more like a stock. Yes, if the stocks all crash, both Bitcoin and gold will likely go down a bit, but they're far more likely to hold their value against a basket of companies in the case of a bear market. This might be the very first time that Bitcoin and crypto are treated as a hedge against the stock market, fiat currencies, but either way, virtually all of these other assets are growing while the dollar is declining, and that is easily visible directly through the interest rate that is being charged on those bonds. Now, when you combine this with the fact that we're likely going to see at least one rate cut over the next 2 sessions into the end of the year, that's going to be extremely bullish for markets, as whenever the stock market is basically off of like 1% off that all-time high, and then we see a rate cut, most of the time we actually have higher highs in the stock market 12 months later. So either way, we're in for a very bullish end of the year. And since that video on the great debasement trade was made, Bitcoin was at 120. Now it's made a new high for $126,000. Even better, when you head on over to Crypto Quant, you can see that yet again, even through this entire range and dump back down to like $108,000, $109,000, Bitcoin continues to leave exchanges en masse. This demand and major supply crunch is what makes me believe Bitcoin's going to hit at least $175,000 probably by the end of the year, if not $200,000. And if that does occur, then this would actually put XRP closer to a $300 billion market cap in anywhere between $4.88 to $5. And that's like my base case. More often than not, more money actually flows away from Bitcoin during times of major growth and expansion on altcoins like XRP. And so you'll actually see XRP put in greater multiples on low liquidity. So again, this is my very base case with Bitcoin being so bullish. I'd probably be closer to like $6 to $7 this bull market cycle. And whether the cycle ends into 2026 or by the end of the year, we could easily see some blow off tops for 60% gains to 100+% gains on XRP. And that can do a lot for many of your portfolios, especially as we've been building a long, strong base just at about $3. So anything above $3.12 is going to be uber bullish for XRP. And I've been waiting into that day. And arguably, for those of you guys who maybe want to pull the trigger a little bit sooner, don't go all in, nor is this financial advice. Maybe just start to accumulate in this $3 range because it looks like we're in a really good, healthy territory with Bitcoin making new all-time highs. So that said, thank you so much for watching the video. Be sure to subscribe to the channel if you enjoyed this video and learned something new, and head on over to altcoinpro.com to check out everything that we have to offer to help you reach your crypto goals by the end of the year. Our tools, training, education, resources, and community, including our pros in DeFi, our altcoin researchers, and our team are the best in the world. And again, we guarantee that. And if in 14 days you're not happy or satisfied with it, just ask for a refund. We'll give it to you. But that said, you won't want to quit because the majority of our members don't quit. We have one of the lowest churn rates and the highest retention rates in this entire platform globally. And that's because we're actually helping people make more money than they spend with us on the membership. And in a single play, you could likely pay for that membership for the entire year. So go ahead and check out Altcoin Pro. Thanks so much for watching the video, and I will see you in the next one. Goodbye.